let's take a look at trading a Fed day. Today was bananas for a day. Absolutely bananas. So let's start off with our daily, and let's remove some drawings. Let's just... Cool. Let's get rid of all that nonsense. But it is completed the smile. Alright, so let's start off with some data, which I know you guys hate, but it always is one of the most important things. How many days do we want to go back? 1, 2, 3, 4. I don't think we'll ever, well, if we ignore that, this is kind of playing within this range, so I would have probably leveled out some daily love. Just as a reflection. Now, what we kind of want to look for is when you start looking at your days, pretend this doesn't exist, right? So you kind of want to look at highs. I got to draw it all the way over. And the other thing you want to look at is, completed this monstrous up move here, pulled all the way back, pulled up. So that's all the data we have. So our question needs to be, if we imagine this bar doesn't exist, is where would we head downward versus maybe the next level up? So if we looked at levels up, and then obviously if we were to fulfill the smile, that would put us super high. And just because we don't know about it doesn't mean we shouldn't plan for it. So I'm going to go back 3 days because we kind of hit like a double bottom here and we start making an upturn. We pulled back to to the top there. Whoops. And then we don't really break this day, right? So I may not look to go lower than that, depending on how the day plays out. Okay. So there's the daily, and we'll break it down to 4-hour time frame. See if there's any ranges we're kind of missing. Not too much. You could also play that bottom there and maybe that range there. Alright, let's go to the hourly. See if there's any other areas of interest. Alright. So let's plot out our day. I'm just going to jump to the 15. It's funny how these lines never carry over the way you want them. Alright, our day for us is going to begin at the open. So, 9:30. This is what everyone should look at when you're trading, is the open. So we're going to look at the high, the meet, and the wick, right? So we're going to check out all of that. And you can see it kind of plays a little bit, it breaks it there, but it's playing within this range, right? Do you see it? Goes up, goes down, goes up, breaks it, goes immediately back down again. So, when you look at this area from here to here, and we could throw that back a bit, you can see it shoots up a bit, but doesn't really break it. I would definitely look to pull back down. I would immediately look to go long here. That's your first trade. And that couldn't be any easier. So trade one of the day right there. And you would be, what is that, 110 to 55, so 45, 40-point run. You're rolling 2 to 3 contracts deep on that. Absolutely loving it. Now, here's the best part. It hits the top line here, and it goes immediately back down again. Now let's take a smaller time frame real quick and see if it gives us room to blink, or if it's just a giant wick. So we start going up, we hit our up, bam, fairly quick. Let's look at the one. Not bad. We hit our zone, we can probably clean that up a bit. We go down, we go up, right? We don't break it. So on something like this, we know we have a range that's working. Oh, that was awesome. But we don't have colors that work. So we know we have, for the short time frame, we have a range that works, that it's not shattering yet. And we know we have an area that we can play off of. And that's the area we look to exploit until it gives us a reason not to. Sometimes it's as simple as that. Sometimes it varies, but if we look at this, we have the short, bang. You could even play off this level too, be honest. But it looks kind of like it goes up. It looks like a base is here. You know what? You can have a base there as well. It's 2 areas, and they both work. Okay. We go down. We go up, immediately short. So if you're trading the 1 minute, which is like micro scalping, but I don't mind doing that. Let's go to a bigger time frame. It's a little safer to trade for some of you guys that don't like micro scalping. But we can see we wick it, we go down here. There's your long. I wouldn't be mad at you if you got out here, but our goal is to sell here. So that's our first run. Here's our second run right there, right in this area, 100% short. And we are looking to get out either on this line or this line. Either one works. With this little pattern here where we're all wicks and we just have meat on those bars, I would probably look to get out here. So boom, we take our long, we nail it, we immediately go short. So we're shorting this line, which is we'll just say 54. we wick that quick, but that's 111. I mean, you know, you can't hate on that. It's another 50-point run. Now here's the twist, so let's chart it out. Remember, this is the open, and it's given us these monstrously easy moves, right? So if we're looking to get out here, it wicks up really quick, so you might have not have been able to capture that move. We'd have to look at the 1. And see how quick it moves. So let's see, 1, 2, 3 minutes. Bang, you do have a retrace, so yeah, you do have the option to get back in there. And you could ride that, bang, bang, there. God, that's tits, man. That's pretty close, right? Yeah. Anytime you get like super close to your area, I've been known to cancel it too. Sometimes it's a safe bet to go about 2 to 5 points below your target. But if you get within, what is that? That's bullshit. 154 to 155. If you get within a point and it starts to wick, you know, go ahead and take it. Take the 50 points, man. Take the 45 points. Don't be silly. But look at this range it's giving us 1, 2, 1. So not only are we going to take profits here, we're also looking to short as well. So take profits, immediately short, ride it all the way down. If you get out here, by all means, that's a great exit. But if you're playing the 1, actually it would have wicked you there, or it would have taken you out. It would have rode down a little further. It goes there, immediately breaks. So you probably would have got a stop loss on your trade for additional long. So if you're playing Pong or tennis or whatever you want to call it, and you're looking to get out here and immediately go long again, you would have got stopped out. You probably had your first loss. However, if we are playing the line, let's see what happens here. So if we're playing the line, it gets a little sketchy, starts breaking away here, bang, bang, doesn't make it, pulls all the way back again, 101, 97, nah, your stop losses should be at least 10, but you could eat this, right, and then ride it up to here, or you could, you know, you could have, I would basically, that would be the out. Anytime you get within a very close range of your target, take the money. Now we're getting close to Fed time, though. Or really, when you get in this range here, that's not a bad. I mean, Jesus Christ, what do you love? 101? You know, 39. You know, you can't take a 30-plus point. But, you know, if you wanted the 50 area, bang, 51. 101, 50 points. So literally you're 50, 50, 50, you know what I mean? You're actually finished trading before 130. 134 you're done for the day. Or even a couple of these trades you should be done for the day. Now, we break into Fed news. I do not recommend trading during major news announcements. If you did trade it, though, to be devil's advocate, if you were trading Fed news, which is going to be these, bam, you know, these major moves. If you're watching it happen, it happens fast. Let's go back to the 1. You know, it's kind of like you're playing around and then just cuts right into you. So you might have like an up move, a down move, you know, really quick. Sometimes on a Fed move, let's just pretend it's different than what you kind of see here because it moves so fast. I really wouldn't play the Fed news, you know, the 230 to. It's such a tough game to play. But what you would look for is you would look for it to, it's because it's whippy. It's bang, bang, bang. It's doing all this really fast, and then you establish a low. So, bang, you have a low there, right? And what you're looking for is you're looking for it to come back and hit the low again. Now, this is within a minute, but what you're not seeing is the 60 seconds of action that create something like this. So you may get bang, 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 you know, you get all this motion, and then eventually it settles. So I think what I tried playing this. I think the low was here, and then I put in a buy with like a 10-point play, and it triggered and immediately took me out in instant. But what you try to look for is you try to look for a play where you think you're going to catch the whip. So let's say this is 60 seconds, right? And it's moving, it's doing this, right? And you think your low is here. You might, it's a gamble, but you could put in a buy and then you immediately put in your stop loss. The only problem with playing moves like this is if it just really jumps and does a big move, you know, there's a chance that it may trigger one of your trades, and then it may gap your stop loss and just keep going down. I mean, it's really kind of dangerous. But if you wait for it to settle, right, so you're here, you're there, you're back there again, right, you're there, this is happening 1, 2, 3 minutes. You're just covering these zones. You know, you're covering freaking, you know, 155 to, you know, 90, and you're doing it quick. But you can see it starts to settle kind of in this area here, and then look for the meats of these bars and determine like an area at which you feel comfortable that it's reversing. So here we have 1, 2, 3, 4, probably around 5 minutes. It looks like it's a little bit more of an upward move, even though it almost retraces. You know, here you go down, you go up, you go down again, you're like, oh fuck, you're down again, Jesus Christ. And then, you know, it doesn't mean you still can't whip down again, but it looks like once you hit this bar, you're starting this upward move. And you know, here was your low, here was your other low, didn't break a new low. You can gamble on the fact that the meat of the bar starts rising. So on this bar here, that would be the next area, right? And it just so happens that this range here is what we were playing off of when things were kind of normal, right? And then our lower part was here from the day, see? And it nailed it. So I mean, if you went for the low of the day, you also could have played that and just put a quick stop loss underneath. Actually, you would have caught it, yeah. If you hit the low wick of the day, oh, that would have been tits. You would have nailed it. You would have nailed that 150. But it happened so quick. But Yeah, because you only would aid a little bit of heat. What is that, 75? Yeah, nothing. Your stop loss down here. You might have been able to catch it back to there. What's that, 52 to 76? Jesus. So 120.76 to 12153. Let's just take a look. It's 100 points, roughly, right in that ballpark. Crazy, but also, you know, it could turn around and just eat total dick off of it as well. But if you wait for the war to happen and you make it the best educated guess that it's not breaking this line off of this move, that would be the next entry. Follow it up to here. There's nothing wrong with that trade. If you were to let it ride, because you're not really in danger till this bar here, this area where it's, you know, kind of pulls back. Right there, actually, it pulls in. So you're looking to get out when it breaks, you know, back into this area. But that's not bad. I mean, if you put your stop loss or your if you just moved your stop loss to there, right? You know, you're crushing it. You know, that's not a bad trade. So if you took the 112 to 172, right? Sounds familiar. You're killing it as well. Let's go to a larger time frame, because then the Fed news is. Let's check out on 1.5. So here's where it gets a little interesting. When it gives you the this beautiful up, down, up. It gives you this nice pattern, right? Then it wicks it again, and then just devastation all the way up. And that happens quick, so we probably wouldn't be able to catch that on a 15. We'd need a smaller time frame to make that assumption. About the only thing that's been clear to us in some of the patterns we've been doing is that, God, look at those wicks down, just disastrous, is the pattern that we've been shorting here and buying here, right? And that was our low bar of the day, so that was our new low. And it hits it here. How much heat do you take on that? 74 to 55. It's too much heat. You'd lose it. 10-point loss. That was your Fed day. Fed day's over. You made that beautiful trade there. Right here, pulls back. That's a loss. Here's a teaser. Here's the next best trade. You take that short. Bang. You're looking to go long. So in this scenario, you're almost better off trading smaller time frames. As crazy as it fucking sounds, that's where you want to be. So you go all the way up, you take your profit, maybe get a stop loss there. Are we going up? Nope. Bang. That's probably your next short. If you're just playing the pattern of shorting that's aligned. It did break it, but then it crushes it. Another option is always put a buy in at the lows. So if you put a buy in at 75, it's too much. Now you get smoked. You would get smoked. So it gets a little tricky in here. You're gonna have to start playing bar by bar. But if you short here, you take that profit there, you're good. You look to go long, it stops you out, you wait. I would wait till it significantly crosses these bars. Right? So you want none of this. you want to just leave it alone, see if it dips, see if it comes back. If it does come back, we want it to cross this bar significantly. So we would either look to get in on this bar here or this bar here would be our long. You know, we might eat a little there. Well, not really, because we could probably take that heat. What is that, 99 to 89? That's like 10 points. Might get stopped out. You wouldn't get stopped out there. And then you could ride. So you're either playing this bar or this bar. Ride it up. And then it never... The neat thing about this long, if you did take this long, is we know we're breaking out here a little, but then we tank. We get chewed up a bit here, but now we're looking to go long. We'd look to go short here, but it's breaking. It breaks it once, breaks it twice, goes down. There's a very good chance we're breaking this area. And the more you trade, the more you'll see this. Once it starts testing a particular area, you get a break. Break again, right? Goes down. So instead of shorting here, what I would look for is I would look for a breakout. And you don't really need to... Right now you're looking at bigger levels once it breaks this range. So you're either looking at this area here, which was the previous, or you're looking at some of the levels which you've drawn out based on previous data. So you're looking at like this area or this area. I know it sounds crazy, but that's why we draw our lines based on our past data. And we want to know that's a serious long. So you're probably... And this is a 1 minute time frame, but if you played this right, you would probably look to get out on this bar here, right? So you're looking at 126 to 263. My God, disco. And then we look at our bars to see if they're going to break lows. So let's say this was our, where we thought it was going to go within this area. So it hits here, you get out. Goes up, goes down, breaks this bar, right? As it breaks. Is this bar ever challenged? Is the question we need to ask ourselves. So the furthest it goes is here. So now we need to ask ourselves, when does this bar get challenged? Right? So we have here, here. We want it to break this level. Just to see what, to make us get out. So let's see, we go up, we go down, we go up again. We break out of here, we pull back to here, we take the next bar. If you wanted to play it, you play this bar. If you're Al Brooksing it. But you're looking at levels, so if we broke this level, our next level up is here, right? And because we broke this level, we pulled back and we broke through it. We never really pull back again. Here would be the next long, and you would be looking to get out at this level because that's your next level up. Excuse me. And that is what? That's like a 99 to 371. It's bananas. And I know it's crazy, but here's kind of our next range. This probably wouldn't have worked out. We break it there. But if you wanted to get in on the long, you could have taken that bar right there. When you start seeing these massive moves, you know, when you're going from like, well, I wouldn't really say massive moves, but 73. When you start getting into 20 and 30 and 50 point moves, and if you're in any type of, you want to start taking profits. Some people like to hold, you know, days worth of data, you know, and they may play a different game. But when you're a day trader and you're 3 contracts on the NAS, 3 to 4 contracts, and you're hitting 20, 30, 50 points, that adds up very quickly. If you played a day like today, just ranging, you know, before this crazy news, you know, you're probably in the $7,000-8,000 area already in profit. So you kind of need to ask yourself, you know, what do you want to pull in a day? You know, the longer you're at the table, the more chance weird shit can happen. But I mean, you definitely want to establish a system that works best for you, where you could take profits, and establish lines, levels, and when you break through, for instance, we were long here, we get out, don't do anything, you can go long again here, we get spanked, we take a short, ride the short down, look to get out. Are we breaking up? May eat some heat there. We take this long, goes up, no reason to get out till here. Is it going to challenge this next level? It does. It challenges it, breaks it. Well, we can get in this bar. You know, it just keeps skyrocketing from there. But the point I want to make is, take profits. If you just play this area in here, you're done for the day. There's so many of these trades where you don't need to trade the entire day. You know, what you want to do is establish a take profit area that you feel comfortable with, that fits within the parameters of whatever you're trying to achieve. I know that sounds weird, but you know, let's say you have a goal of $1,000 a day, right? So you've already made that there. If you have a goal of whatever your goal is, set it, and then just simply walk away. If you felt that once it broke this line here, that we were just going to skyrocket up, you could always just, you know, move your stop loss here and then just let it ride, come back later, see where you're at. You would be in a profit area. If it whipped down and took you out, you'd still be in profit. If you're in a combine, or you're in any type of situation where you're trading someone else's money, and you have a certain area at which you have to play by their rules because you're trading their money. So I think you're better off establishing, it's like, I wouldn't really say escape routes, but you're better off establishing your nut and then simply turning your computer off for the day. Whether it's 1,000 a day, 2,000 a day, if you think you're like everything's working out, where it feels like a toddler could trade it. So if you're like, you know, I should sell here. Well, there's a sell, bang. There's a sell, bang. Next time it hits this line, let's say you weren't playing both directions. I play everything, but let's say you just determined for some reason you really like this resistance, so you just sold it. Boom. Sold it. Boom. Sold it. bang, you know. Even if you were playing this line here, and what is that heat? That's 54.61. That's not enough heat. You could have rode that all the way back down again. You know, you could have had your 55 to, you know, whatever. You could have had your 44 points, 44, 88, you know, and so on. You're well over 100 points. You're doing 3 contracts, 2 contracts, even 1 contract, depending on what you like to trade. Very simplistic. But, you know, there's only so many times that, you know, you challenge a line and then it's going to start to break. And then, of course, skip Fed. I wouldn't even trade the Fed news. Wait several minutes afterwards. Wait till it reestablishes itself. The nice thing about this is you went jing, 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 you know, and you ended up kind of where the low was, right? And then you started building your way up from there. So you didn't flash crash like over here, back down here. So it wasn't like bang, bang, and then if you just threw that there and went down further. So you felt good about, you know, taking along here. If you had just taken along here and let one ride, so maybe you have 2 to 3 contracts or 2 contracts or whatever, and you get out there and you let it ride. You're like, you know what, here's my first take profit. If it breaks down below here, I might get out, or I might, you know, move my stop loss to here for now. Then as it progresses up, you know, I'll start moving it up. When you start breaking away and you start seeing these trends, that's when you got to start looking at your previous lines that you drew from your dailies and your 4 hours and all your other lines. So now we're looking at much larger areas to fill. You know, even here we failed, and then the next time we retested it, we nailed it, right? Fail again, nailed it. We did not hit this area in here, but I bet if we looked at it, what is that, 23 to 31? I mean, anytime you're riding this much take profit, take the fucking money. Especially if you feel a smile, like it goes down, goes up, take it. Goes down, pulls back, pulls up, take the profits. My God. But this day was a bananas day to trade. Even if you were, I don't know how, but let's say you got chewed up and stuff just wasn't going your way. If you just decided to go long off that data there, I mean, you probably would have made it. This was an easy day to trade, and most of our setups were given to us. You know, we looked at the open. Let's make it a little bit bigger. Dun-dun-dun, dun-dun-dun. It's kind of crazy when, you know, you pull out your larger time frames. That's the other thing to look at too. You know, when you start hitting like that area, this area, that area, you start questioning yourself, like, is it, you know, I kind of hit this range. Is it going to break through it? Just shatters it. That's another area too. I didn't draw that though. Shame on me. Oh no, I got a little pull back there. It pulled back there. Sure did. Right in that area. Bang. But you know, but just craziness. So when you start breaking out of here, you got to go to your bigger levels to look at, you know, hey, where are we heading? You know, start going back to the hourly, the daily. Just take a look at, you know, how much go-go juice we really got. We decided to level off almost there. Pretty close, right around, you know, right in that general area, yeah. Right there. Pretty damn close. If it were to fill all the way up, obviously we're going up to these levels, but it didn't. And if, you know, you can kind of see, crushed it. Amazing. today was a relatively easy day to trade, but when you start breaking these levels, you know, check your charts. You know, like if you trade the 15, like I generally like the 15, but when it starts, you know, just cranking up, you know, I got to go to smaller time frames. I need to see how it's moving within those areas. And if it's kind of big within my zone, you know, I start getting these big bars, you know, I'll take it down to the 1 minute even. And I'm still looking for it to break to the next level. You know, I didn't do it there, obviously, but, you know, you get the picture. We created our range. We had the low, broke it, and then we had our levels here. Easy day to trade. There's no reason you couldn't crush it today. But what I think the most important thing is besides, you know, trading with what does it give you? So, you know, establish. I didn't even go back to the 930, but establish. You know, establish the open. Establish that 930 zone, right? You know, 932. So 930. We had a high. Where does it stop? You have one there, one here. So we're kind of establishing that's the meat, that's kind of the low, right in that area. Wouldn't blame me if you had that, but then we had to draw this line because it wasn't touching that, right? It was touching here. But one thing we noticed was it wasn't really breaking this line. So we had the low of the day, starts pulling up. Let's take the long. It's not breaking it. Take what it gives you. If it's not going to break the line, fucking short it. Short that, right? Until it breaks it. Take what it gives you. It's giving us this range. Fucking play it. So you short it again. Bam. You want to go long? I have no problem with that. That's what I did. Shit, I think before 2 I was up 8. You go here. What are we going to do? Well, big fucking question. We're shorting the fuck out of this thing again. Probably would have looked to got out there. I don't remember. But, you know, had you wrote it down, you could have wrote it down. A little bit of fuckery here, right? No problem, though. We established a new low. Nothing really challenges that. So now we need to go back to our safety zone, which is here, and see if we re-break this line. No, we do not. So if you're on the 1 and you're micro scalping, obviously you could look to go long within this range. But get to, you know, pick what it gives you. You see it start to roll over. Then you eat there, eat a little heat, not much. You're still in the game. Goes all the way back up. Bam. You're done for the. You are so done for the day by now. Well, let's say you're crazy and you're degenerate and you just like to keep trading. You eat the joy that is that. Honestly, that play there would have been so tits. I didn't think of that. I should have played that low there and done a 10 point off that. I could have rode that quick 100. Wasn't thinking. Then again, it could have shot down and, well, it would have stopped me out anyway. We lost 10 points regardless. That's another thing I want to say. Like, in areas like this where I feel comfortable and it kind of has an established range, I'm looking to take a little bit of heat, but I'm looking to load up here. So whereas if I'm unsure of how it's going to go, I may trade 1 to 2 contracts. If I feel comfortable in a range, I may trade 3 to 4, and I may have my stop loss really tight, you know. But I'm looking to take, you know, a little bit of heat, not a lot. So that's 5. That's 3 points. It doesn't really give you more than 5 points of heat off this line. It does there. But, you know, for most of these areas, you could load it. And then if you only need to do that once or twice. So if you're going, you know, 3 to 4 off of that, bang. If you're new at trading, don't do that at all. Stick to 1 to 2 contracts. You know, maybe play 1 contract or 2 contracts, bang. If you're real sketchy, you can always take 1 contract. Here we've already got a range established. You know, I know some people that play 2, and they like to cover much wider distances, but they'll always take like an area in here maybe as their first take profit, and then they'll let the other one go. find a style that you like. But once you feel really comfortable about an area, there's, do really tight. I guess what I'm trying to say is, the more contracts you have in play, the tighter your stop loss has to be. So if you're rolling, 1 to 2 contracts, you could probably eat, 10 points, right? But if you're rolling, 3 to 4, you don't want to eat that. You may only want to eat, a couple points, or you may have you may have your stop loss, 2 different types of stop losses. So you may have, let's just go this area in here. So where did we establish? So we went long here. We're looking to short when it hits this area. Actually, you never take heat, it automatically goes down. But let's just say, for instance, this was our heat for some reason. So let's say we played this, boom, rode it all the way up. We look to get out here. We're looking to get in the second it comes back down and breaks this area. But let's just use this bar, for instance. Even though it's irrelevant to what, let's say there were a couple bars that did this. So we know our entry was here. So that's 5. 3 points. So I don't like taking more than really 10, 20 points of heat tops on one contract. So if I'm going 4 contracts, right, I do not want it to go past 5 points of heat, because that's a 20-point loss. And so I'm really playing this tight, right? Now, unless I have bank, so let's say I'm already up a couple thousand or whatever, then I have a little bit of play where I could stretch that some before it goes down. But the nice thing about playing smaller contracts is you can take more heat, and then you can play the range. I was real comfortable with this range. They were just giving it to you, so why not take it if they're going to give it to you? But a lesson learned is, the more contracts you play, the higher risk you are. Never ever play a lot of contracts on the open. So at 930, you don't want to be playing multiple contracts, because it could do exactly what it did here. You might have a 100-point move or a 50-point move. So if you don't have your stop losses in, or it gaps a stop loss, or it does something weird, or it doesn't register, you've just eaten 50 points at 4 contracts. You're done. You're wiped out. So that's why some people don't like to immediately trade the news. If you want to trade an area, it gets risky to trade, trade news events. Sometimes you can give it, a minute into it or something like that, and see if you establish a low. But you still run the risk. You always run the risk. If you established that low, you would have nailed it. But you always run the risk of fuckery. And so why put yourself at risk when they're giving you this, right? Giving it to you. They're giving you this, right? Level. A little bit of bullshit. That's kind of, it's a weird one. Kind of tops off there. A little bit in that range, not quite, but a little bit. But you get these big moves sometimes. This is a 1-minute chart. That shot up from 1179, like that. So I mean, you just got to be mindful. So sometimes, start off small, build up a nest egg, then start, playing more. But if it gives you this beautiful stuff, take it. And then, but yeah, the more contracts in play, the tighter your stop losses have to be. And then you never want to trade news events. So you always want an area, like look up news events, write them down. I know when I did FTMO, they have a a client area, and then they have a calendar. And I still use it. I'll still log on to their site and use their calendar because it pulls up all the news events with like a ticker. And then you have it down to the second to where it, goes live. And then, but on their account, you're not allowed to trade news events. But I think you can see, the gist of trading, why it's so important that you have your pre-existing levels, right? And then you have what they give you in a day. And it might not be pretty. It could just be a stagger up. It could be a range. It could be a range, then an explosion. I mean, it's a bunch of different things that are going to happen throughout a trading day. And the more you evolve as a trader, the more you'll realize that, hey, I already made my nut. I already made what I want to make in a day. I already topped out. Let me go ahead and just close the computer screen. And that's another important thing too, because you start playing with, I think we love dopamine rushes. We love, all these different things that happen when we trade. The good, the bad, all that stuff, the ugly. But you got to turn it off. You have to have that off switch. And the more you trade, the more important it is for you to have an off switch. I don't know if you've ever been in a casino, but there's a lot of times there's no clocks. It's like, keep serving you drinks. You can find yourself gambling for 8 hours straight. Just having a fun time. But this will trick you into some of those emotions and some of those things. And if you're starting to feel that, you kind of gotta step away. You shouldn't be trading off of emotion. You shouldn't be trading off of feeling. You should be trading off of technicals, areas. You shouldn't be trading in here, right? So if they're giving me this area and this area, this is where I want to enter. This is where I want to enter, in these areas in here, right? I don't want to play this. I want nothing to do with this. Nothing. And the more experience you get, and the more you see it attack and break, like this is a decent break. If this break never happened and it just stayed within this area here and pulled back down, the next time it hit here, I would still short the fuck out of that. And if it broke through, I'd eat a stop loss. And then I would play my bars and see if one bar ever created a new low, then I might look to go long. But when you look at data right here where it breaks it again, goes all the way down, and then we're approaching here again, I would expect it to break it. And so that's why in this particular situation, I wouldn't look for this line to hold. I would look for it to be shattered. But the more you trade, you'll pick up on stuff like that. But hope you enjoyed this. This is day trading, the Fed, and this is 2-1, the first.